This is the Daily Market Rundown live from the Tradelo trading floor. It's March the 26th. Some highlights from today's show. UK's Reeves is now in the spotlight, GBP is clearly underperforming, and the VIX structure holds many clues. Good day traders, and welcome to the Daily Market Rundown. Looking across the screens as we head into the US session, it's been a relatively quiet one, which is again a continuation of the theme that we've pretty much seen since late last week. Now we'll talk a little bit about why not only do we expect that to continue into next week and ultimately what's causing it, but ultimately what are the opportunities given we can continue to expect to see this sort of slow grindy type price action within the markets. Now that being said, looking across the board, there's nothing really standing out. We can see oil's up quite nicely in the overnight session, but it's very much a market that if you look at the last almost 20 days of trading, it's done absolutely nothing. We did see a very healthy session again yesterday in the US equities, and again we can see that little bit of underperformance in Europe. DAX down around 0.5% as well as the CAC. So it's very much a case of the US equity market is outperforming Europe, but that's perhaps possibly because of the extent of the sell-off that we've had over the course of the last 2 to 3 weeks. Now, with that in mind, let's turn our attention because it's very much about Europe today, and our first topic is all about Reeves, who is the UK Chancellor. She will be up very shortly within the next 45 minutes to ultimately deliver what she believes is the outlook going forward from a fiscal stance. Now, the important things to take away from this is typically when you look at the UK and how they release things, most of this will already be in the market. So there's not supposed to be any big surprises today. But what we learned from Liz Truss just a couple of years ago was that sometimes they can surprise the markets and do so in such a way that really does create significant volatility. Now, I think the key sort of focus point today is ultimately this black hole that Rachel Reeves is wanting to address. Both herself and the Prime Minister Starmer have told us that they are not going to be fiscally irresponsible. They are very much going to balance the books, and ultimately they're also going to rev up economic growth in the United Kingdom. Now, the reality is, of course, you can try and look for all sorts of savings in all sorts of directions, but the reality is that they are not finding those savings to the extent that they would likely have hoped. Now, importantly, Reeves is very much coming from a stance of austerity or pulling back on government spending, particularly with regards to welfare. So the markets typically like this. They like the idea of a balanced book situation, so long as it doesn't kill off growth. Okay, I think that's going to be the key test for Reeves is, can you actually grow the economy? Can you actually rev up the economy if you're cutting back on government spending? The short answer is no. I don't think anyone technically believes that. And so we will continue to see this sort of stagflation environment in the United Kingdom, where they have got well above sort of target inflation, and at the same time growth that continues to contract. Okay, it was just revised now by the Bank of England that they're only going to grow around 0.75% this year, but of course we also are going to be seeing quite a bit of fiscal cuts going on in the UK. So a lot of things are moving on in the UK, and there's quite a number of things going on. But for today, I think the key thing is keep a very close eye on the gilt yields. That is the chart of the yields. And I think the key takeaway is you can see yields have been very much contained within this 460 to 480 range for pretty much the entire month of March. You can also see that we've done this sort of series of higher lows and higher highs over the course of this year. We've not actually done much in terms of gilt yields, but what I will point out is note how we are approaching the elevated levels around that 490, which is pretty much the highest yields we've seen in the UK pretty much for some number of years. So it is a very interesting backdrop now where we continue to see long dated yields marching higher in the United Kingdom at a time when, of course, the central bank is cutting, at a time when, of course, the fiscal exchequer is also talking about cutting back on spending. Okay, so right now this is a very difficult scenario for ultimately the UK economy, where yields continue to rise despite ultimately the best intentions of the chancellor. So keep an eye on that. Should we see some volatility, should we see the gilt yields rise above that 490, don't be surprised to see ultimately that put some downside pressure on the pound, because markets will then ultimately be trying to almost repeat what we saw back with the Liz Truss scenario, where they believe that the exchequer is going to be spending beyond its means, and investors therefore are going to be demanding higher yields. Okay, so again, not expecting a great deal, but it is something that you want to watch out for. Keep an eye on the gilts because they do have that potential to stage some volatility. Now, with that in mind, of course, we also had some UK data out today. Inflation missed to the downside. It was a slight miss on the expectations. And again, this has just revved up the idea of potentially a May cut. I think there was some expectation, of course, of a May cut, and that's increased slightly, not a great deal, but as a result of ultimately that softer inflation, we can see that the pound is the clear underperformer today. If we're looking across the dollar crosses, it's one of the very few currencies that's actually down against the dollar today. And importantly, if you ever want to know whether the pound's underperforming, outperforming, just have a look what it's doing against its main trading partner. And we can see the euro is up 0.3% against the pound today. So very clearly the underperformer today. So should we see some dollar strength come in later on the session, ultimately you want to be looking for sell side only trades in the pound. From a technical standpoint, we've been talking a lot about the sell only environment in the pound for the last couple of sessions. That remains the case. You can see we have made some sort of technical ground over the course of today. We've finally broken below this sort of rising support. Not that I'd call it support, I would just call it a consolidation zone. We've broken now below it, and the market's starting to accept value a little bit lower. Importantly, we have bounced off of last week's low, so for now I do expect perhaps quite a lot of two-way trade between this 128.88 up to 129.12, but don't be surprised to see a little bit of an extension later on today, particularly if we do get that dollar strength coming through. Okay, so very much a market to pay attention to because it's very much got a little bit of a bias to the downside, and of course, like I said, watch the Rachel Reeves announcement around 12:30 GMT because that does have the potential just to give the pound a bit more of a kick to the downside. Now, with that in mind, turning our attention to the structure within the SPX, I think this holds a lot of clues for us as day traders, and as to it explains a lot why the market is very much dampened in terms of the volatility we're seeing on the screen versus what we saw perhaps a week or two ago. The reality is that everyone is bracing now for April 2nd. Okay, I think that's what the term structure is telling us. As you can see, the implied vol is very much talking about getting towards that hedging itself into that 2nd of April announcement, and then once we clear that announcement, we should of course get some of those hedges expiring, and ultimately the risk of anything unknown does clear. So I think that's the way the market's now structuring itself. It's looking as though we are going to maintain any kind of move both to the upside and to the downside until we get to next week. And once we get to that April the 2nd, then fine. The details will matter. The types of tariffs that come into play will matter. And of course, all those hedges will likely have expired at that point. So very much a case of it looks like hedging activity is going to keep the market well contained in the near term. And as a result of that, we of course do need to heed that warning. Okay, what it means is we don't want to be aggressively buying breakouts, and we don't want to be aggressively entering positions. We need to be a little bit more passive, pick our spots, and ultimately accept that the market now is going to remain pretty contained until of course next week. Now, with that in mind, there is one market that's in play. It's very much a market that we've been talking about over the last couple of weeks. It is gold. Of course, we did stage that breakout to record highs. And late last week, we spoke about that little bit of an offer likely to come in. We have now, of course, sat for the last three sessions inside a very narrow range between 3,000 and 3,035. As a day trader, I very much expect at some point today we are going to snap a little bit lower and retest that 3,000 mark. We can see in terms of a profile, $3,000 on the profile is very much an accepted volume point of control. The market has been very comfortable with that area. So don't be surprised to see the market trade down there and then perhaps bounce a little bit and begin the process of trading sideways again. So very much a market that does offer about $30 to the downside with very, very tight stops. Where that sort of energy or that sort of price action will shift is around that yesterday's low, which comes in around 30.17 on the futures chart. Okay, aside from that, in terms of support levels, if I was going to buy this anyway, I think the breakout zone comes in around 64 to 74. If we did get to today, I think that will offer a really good buy side opportunity. We will be quite oversold into that area. And of course, if that does fail, then 20 29.40s is the next area of support. Okay, with that in mind then, of course, that is a wrap on some of the trade opportunities for today. In terms of economic data, there's not a great deal out on the docket. There's no real headline data to be worrying about too much. We do, of course, have the oil inventories later on. Oil is up 1% on the day, but like I said, not a market we're paying very close attention to because there's just nothing going on in it. Okay, so with that in mind, if there are any other questions, do post them in the Discord channel. Otherwise, as always, manage that risk. Good luck out there. Go make some money.